Please welcome to the stage our moderator, Marta Plana from the European Regulation Forum. Thank you very much.
Good morning and welcome everybody. Thank you for being here today. We have two people that are references in the fintech world, and we're very happy to be able to be, for the next half an hour, able to speak about efficiencies and taking out the middleman. That's what you're going to talk about and what you're going to explain us, no? Yes. So it's fantastic. For the panelist participation, we'll give 20 minutes, 25 minutes, the rest for Q&As. I think we can interact and we'll learn a lot more by doing that. Philippe Gel is CEO and co-founder at Cantux. Philippe is the Chief Executive Officer and co-founder, a specialist foreign exchange company headquartered in London. He founded Cantux in 2011 with Antonio Rami and John Carvajal. Philippe began his career working for Renault Suisse as a financial controller, and then he gained invaluable experience in the banking industry as a consultant at Axis Corporate. Before founding Cantux, he was a strategy and management consultant at Deloitte. He specializes in corporate finance and business strategy. Next to him, we have Max. Max, the company is Centrifuge, is that That's right? And fundamentally, you change how business transact and collaborate from a global commerce perspective. I'd like to kick off the panel by asking you some questions. How are your companies transforming the world of finance, and how are you creating efficiencies?
Sure. So let me start. My company right now is a blockchain-based company. If we think a little bit what Bitcoin does as the first blockchain application, it's taking out or reducing the reliance on a middleman. It's like you can transfer money, in that case a Bitcoin, from A to B without needing a middleman, a bank, a PayPal, or a Venmo in the middle. And we try to apply that concept to commerce or trade in general, so that two trading parties can transact with each other, send invoices, pay each other, without relying on a middleman. That's our goal with Centrifuge.
Thank you, Max. Any other comments?
What we do in Cantux, we build solutions for businesses to automate foreign exchange transactions. So what does it mean? If you think about business as it was done before, companies were very often buying and selling in foreign currencies, which is much higher friction than using your local currency. Imagine you have a Spanish business, you sell in the US, in China. Being paid in foreign currencies and processing to the exchange is sometimes quite complicated and expensive. We automate all this process to make sure that businesses can focus on their core business and don't really care anymore about foreign currency transactions. So it's more based on automation, really, and reducing friction than taking out the middleman.
So why is middleman bad?
I would say my opinion has changed a lot compared to some years ago. When we started, our idea was very much focused on eliminating the middleman. Our idea was to say if there is a middleman or different middlemen, because very often it's different ones, not only one, it's by default not good and not efficient. I think that it's more complex than this. If you have a middleman, even several middlemen, but also process is extremely efficient in terms of speed and price, so that's not necessarily an issue to have the middleman. What's true is that historically, and even more if you consider the financial industry and banks, the middleman has been very opaque, very expensive, and creating a lot of friction. But it's not necessarily bad to have a middleman. What's important is to have efficiency, with or without middleman.
Max, you also act as an angel investor and a mentor for various startups. Do you encounter that kind of like middleman issue with not only your company, but other companies that you see on an everyday basis?
Well, I mean, the majority of businesses, especially in fintech today, are kind of trying to be a middleman, but a better middleman than today. What I mean with that is you provide a service that historically was in the hand of an incumbent. I mean, think about what I pick. The taxi business and Cabify and Uber now being a middleman, which I kind of think it's a better middleman than just the taxi business before, because you have choices now, you have options, until it isn't anymore. What I mean with that is, let's take again Uber, where the middleman gets so powerful that, at one point search pricing happens, and you're forced then to use their services.
It's funny you mention Cabify and taxis, because you know this is the hot topic in Spain right now with government and entrepreneurs.
Yeah.
So my question is, monopolistic middlemen prevent others from innovation. I would argue with less innovation, there is less choice and little efficiency. So how do we prevent from building on top of those middlemen and those middlemen being helpful and the innovation? Are they compatible one another? Or is it only a bad thing to have a middleman with all the conclusions you're sharing here with us?
I mean, generally speaking, if a middleman provides an additional service, I think it's up to the user to be able to decide whether the middleman is helpful, it's worth using that service, it's worth paying for it. Where I have an issue with is there's a middleman where I don't have a choice. Like, let's say the good old days, 5 years ago, 10 years ago, when there only was the option to take a cab. Here in Madrid, there was a taxi period. I take the taxi, I get screwed over if I take it from the airport, and now I have a choice. I have Cabify, I have Uber, I have taxis, and in other cities I have Lyft and whatever. That's where I think the
Not
huge
for
difference.
long, it looks like.
Well, we'll see. I think you cannot stop innovation. I think just because some taxi drivers get a little bit mad, just delays the things that will happen anyway. That's just my opinion. And I know there's different opinions, but yeah, I'm on that side of the house.
Do you think fintech encounters those same problems, Philippe?
Definitely. So we have moved, I would say, from the financial world where you had only banks, only incumbents, which are all the same, maybe different size, but they have the same behaviors and patterns, to a financial world where now we have a lot of small companies, fintech companies, competing with banks, still at a small scale, but clients start having alternatives. And when you have alternatives, this means that there is more competition, and when there is more competition, it means that even incumbents are evolving, or because they are forced to evolve, or because they start collaborating with fintech companies. But what's sure is it's important to have constantly, as you say, competition, alternatives. And I think the two only purpose of any regulator or government should be make sure that there is free competition, and make sure that if there is at some point a monopolistic middleman, they kill it.
And now that you mentioned the monopolistic sector and all the issues we're encountering, especially here at South Summit, do you think Spain is the place for a fintech company?
I mean, you have your fintech here, so maybe you answer first.
7 years ago, when we created Kentox, we created the company in London. And since that moment, we have, to simplify, 80% of our team in Barcelona, 20% in London. Because at that moment, regulation in Spain was not ready really to help fintech companies grow, neither here, neither in France, neither in Germany, basically not in continental Europe. Nowadays, it has evolved a lot. Regulators in Spain are really have much deeper knowledge about what we expect, what we need, and how to build really a competitive landscape. If I had to rebuild or restart the company nowadays, I will eventually start by being regulated in Spain. So the evolution has been very good. I don't think that in Spain we can still use regulation as an excuse in fintech not to be able to start companies to grow and to compete internationally. So the evolution has been very good. So quite positive in that sense.
Yeah, I mean, I think it's a little bit of a mixed bag in Spain. We have a super strong banking system here, like BBVA, Santander, like really world-class banks, which is good for a fintech because, yeah, it gives you access theoretically at least. On the flip side, it's preventing as well because most of the things need then to go through the banks, and you need the banks to do something. And because they're so strong, it doesn't help fintechs.
Do you think about the possibility of becoming a bank, or you think fintech companies are to be fintechs for good?
I mean, For myself, no, that's not an option as a company, neither with my previous one. But I mean, there are certainly fintechs that seek banking licenses or fintech regulations, absolutely. So where it makes sense, it makes sense. For me, no. We're a product company. I don't want to get into the financing stuff.
But would you be willing to have a level playing field for both?
Oh, very much so.
And you too, Philippe? I'm going to record this.
Yeah, no. I do think, meaning regulatory speaking, I do think we have a level playing field. I mean,
You are? Sorry, you are a level playing field?
no, what I mean is regulation is not really an issue. Nowadays, if you want to build a bank from scratch in Europe, maybe in Spain it's a bit harder, but at least in the UK, if you want to build a bank and have a banking license, and even in some more exotic countries in Europe, it's feasible. It's not super easy, it's not super quick. You need some capital to start. But recently there was a study in the UK from Deloitte that basically say if you want to build a bank from scratch with a banking license in the UK, it's 20 million capital up front and 10 million a year to run the bank, which means that with 30, 40 million, you can start a new bank from scratch. I think it's a reasonably competitive model, and it really opens doors to new players. But then we have to understand, and very often there is a confusion here in Spain or in other countries, most fintechs are not banks. They are payment institutions, which is the license we basically need to do what we do, which means providing very specialized services in trade finance, foreign exchange, payments. We don't try to be banks. Some fintech try to be banks. If you want to be a bank, you can try and you can get a license, but we are not trying to replace bank and to offer multi-products necessarily. And also being a bank means a lot of responsibilities with clients in terms of risk. Also, it means that you will be in some way protected by the local regulator in terms of bankruptcy or these kind of issues. So I think now the regulation is really well adapted to the fintech space. If you want to be a bank, you can. If you don't want to be a bank, you can also do business with a bigger bank. The main issue, in my opinion, still is unfair competition from banks, which very often try to basically stop or slow down fintechs that want really to start and get traction. Because if you are a fintech company with a payment institution license, you need a bank as a partner because you need a bank account to start. And if you have no bank providing a bank account, you do not start. So really regulation is now fine. It's really still unfair competition from banks that may be an issue.
Because the European Union, I believe, is very much watching for all countries, and they're trying to localize laws that interact with fintechs and the incumbents.
Yeah.
So having said that, are there any experiences you've encountered with banks trying to maybe not help you within the market here in Spain or elsewhere? You've seen many other countries. Would that be a comparative thing?
I'm thinking. So with my previous company, maybe is a good example where it's a company named Taulia, and we did trade finance. So we help suppliers to get paid earlier, either by their customers or by a third party. And this third party piece needs a bank, it needs capital. So when we started the company many, many years ago, it was virtually impossible to get the attention of the banks, the collaboration of the banks, because there was no business to be made and they owned the customer. So for us at Taulia, the first years were very hard working with banks. They used their power that they owned the customer, and we couldn't access those customers.
Do you need the okay of the banks to be the next unicorn?
No, you don't, but you need access to corporates. In our case, you need access to the corporates, and the corporates are very, very often here in Spain, but it's true for pretty much every country. The corporates are in the hands of the big banks still. The treasurer listens to the bank. The treasurer.
It's a no, but a yes.
Maybe.
You look like a lawyer. I'm the lawyer here.
Yeah, no.
And you, Philippe?
Look, I can speak about the two markets I really know, UK and Spain. The UK market is very specific because its financial industry in the UK has been for years based on some incumbent banks, so 3 or 4 very large, Barclays, HSBC, Lloyds, and hundreds of thousands of smaller financial companies. So in the UK, banks were very much used to compete with smaller players and about these dynamics. So in the UK, you had some banks that from now 6, 7 years or more have been very supportive of fintech. Others that came a bit later, but unfair competition from banks was not an issue in the UK. It's really a reasonably fair playing field. In other countries, particularly in Spain, we have seen many unfair behaviors. So banks, for example, threatening clients if they were using fintech company services, banks opening account to fintech companies, then closing the accounts and letting them basically out of business, banks spending time speaking with fintech companies about product innovation and then copy-pasting products. So in Spain, the behavior has been very unfair for years. I think it starts evolving in some way because they have no choice. But it has probably been the main reason why the fintech ecosystem in Spain is far behind other markets in Europe, in my opinion. It's not regulation.
So customers should be the big winners of all this digital new era.
Sure.
Are they really, or do we have an issue with the middleman and the incumbent? And how long do you think this is going to stand for?
I think we started it. So, I mean, I just want to give a couple of examples that I think where maybe it gets a little bit clearer why choice is helpful and a bank in the middle or a financial institution in the middle might be preventing innovation and be negative to the customer. Look, think about, in California now, cannabis, weed is legal. That's a decision, and in many states in the US that happened. But still, Wells Fargo and others don't give bank accounts to those startups that are in that area, dispensaries or startups that deal or sell and have a service there. So you don't get a bank account with Wells Fargo because somewhere in their fine print, they're not working with drug companies. So I mean, the same for adult performers. I mean, whether love or hate, it doesn't matter to me, but you have a problem getting a bank account. So Wells Fargo in the middle.
The bank again is the one that's making
that's just,
the decision making is coming from the bank, regardless of the government, the laws. And right here in Spain, for example, we have a socialist government now, which you would think that they're looking very much for startups and innovation, so they say, but are they really? Right? I mean, that's kind of like what you're saying. We have like decision making, and then we have something else. I don't see banks going to La Castellana stopping traffic for fintechs,
Probably not.
Maybe you have other things like blocking accounts or that you encounter on operational days.
The banking lobby is much more powerful than the taxi lobby.
Is it? Can you tweet that, please?
Absolutely, no
totally.
doubt.
Philippe Cantox.
It's really under the radar. You don't see it. They don't go in the street and block the city, but believe me, the banking lobby is 100 times more powerful than the taxi lobby. There is absolutely no debate.
No debate.
I mean, eventually, some people can have a different opinion, but in the end, who finance the economy? Who finance the political parties? So you have your answer. I mean, it's a reality. Meaning, if
But you don't have a law stopping licenses and like the other side, no?
why banks is basically the only organization we save with public money when they're basically bankrupted, because if they bankrupt, it's really a nightmare, socially speaking, in a country. So you have your answer, meaning there is no other kind of private companies that public money will save by default if they have issues.
I had my answer. I wanted yours because he's one of the biggest provocatives I've ever met for the past 7 years. I've seen Philippe interact with many other people, government and stages, and he's a provocative, so we might as well make him, out loud. I think if there's Q&As and questions that the audience want to make, I think we have a great opportunity of having two people that are facing the fintech new era, and I'd like very much for you to be able to interact with them. Fantastic. So I don't see anyone, but I see like a shadow. So if you could present yourself and make the question. Thank you.
Not yet. What? It's not working.
It's not working? If you...
Hi.
Hi.
I'm Fernando. I had to make the disclaimer that I work in a bank. So...
Very nice. You should be here too then.
So my main question is, taking out the middleman in the banking industry, I mean, one of the cornerstone of fintech is try to decentralize, credit systems, in a kind of way. Banking system work with centralized settlement, and fintech try to disrupt that concept in a kind of way, okay? So there is a role for centralized settlement system regarding stability issues in the financial system. So how fintech can assess that issue in a decentralized world? I mean, that's the first question. The second is, because the banks has to take care of a lot of regulation regarding that sense. So, and that's why, in a kind of way, you sit it on the other side,
So if you want, I will let
Yeah.
the blockchain decentralized answer for Marx.
The blockchain.
You take the second one?
I
I'll
want to
take the
add
second one.
something because I think it's very interesting.
Yeah.
Most of you will remember OTTs and telcos, right? Over-the-top companies like Google and Telefonica, for example, here. What they would say is that regulation was different, that they did not have a level playing field, that they wanted same regulation for different things, and that they could not be Google because of the regulator. I believe that's very important to add to your question, because maybe what he's trying to say is that he as a bank can be a fintech, regardless of the innovation that you might add to it, because you don't have that regulation, regardless, again, that you don't want to be a bank. So I think we're talking about different sides, but banks always go back to that regulation issue.
Yeah, on the fintech or decentralization question. So first of all, I don't think fintech is about decentralization. I think fintech in general for the last, 10 years now, since the term exists, is about choice, about efficiencies, about automation. And that's what fintech is about, to automate existing financial processes with technology. And banks play a role there in Kantor's world or in the Thalia world. They are one of the options for the end consumer, for someone that seeks a loan, that seeks FX. So that's perfectly fine. I think it's about option. Speaking about decentralization, you move a little bit into the blockchain area and the Bitcoin area. That remains still to be seen, but I really think there's value in certain business processes or in certain transactions to have a process that does not rely anymore on the middleman. And Bitcoin is, hate or love it, a great example where it works.
I don't know if I can reply, but I think, well,
Sure.
I agree with if the new technology reduce the cost to new technology, reduce the cost, and I'm not opposing to adopt that technology, but if that technology at lower cost increases the risk of financial stability,
Why?
How do you take care of that thing?
Why does it increase the risk of stability or decrease stability?
Well, clearing houses are used to settle payment systems, for example, and they use a lot of capital reserves to comply for those settlements, payments. In a decentralized world, how you can can you perform that
I'll ask
same?
you to be a little bit more concrete, because maybe there are some other questions and we have 3 minutes left.
Okay,
You want
sorry.
to tackle the regulation one still, right?
So now we speak a lot about fake news, and what you mentioned is the main fake news spread by banks in the press for now a long time. So let me try to summarize. If you are a bank in Spain, you take billions of deposits from Spanish people, and you use this money to give credit to others with a multiple which is basically 12, 13, or 14 times. If you make a mistake, if you don't manage well your risk, you bankrupt. And if you bankrupt, public money has to save you to avoid this million of Spanish people to lose all their money. This is why, as a bank, you have more regulation than a company like me that's just providing a foreign exchange service to a client. Then why regulation has increased in the banking industry in the last 10 years? Because it's true that regulators are more demanding. Because if we take the banking industry as a whole, basically, I summarize a bit to be a bit provocative. In 2008, you banks bankrupted the world, and we had to save you with trillions of public money. And in Spain, in particular, you bankrupted the country with a real estate bubble you helped creating. So this is why you have an increasing regulation, and this is why it's not as easy as it was before, because you manage huge risk. Most of you banks big are systemic, which means that if one of you bankrupt, your competitors bankrupt too, and basically the whole house of cards fall down. If you're a fintech company and you offer trade finance or FX, this risk doesn't exist. So the more responsibility, the more regulation, and the more demanding regulators will be with you.
And
And
I would add that I don't think all fintech companies do not want to be regulated. It's the other side. For investment purposes,
Definitely.
you really want to have some kind of rules within the country you're playing, especially with incumbents. So it's not about not having regulation and not having responsibility. It's about having a level playing field that adjusts those rules to your market. Because fintechs are not banks, and banks, I'm guessing, are not fintechs. Any other questions? We have time for 1, 2 more questions. If not, how many of you are in favor of fintech companies entering the banking world? Can you raise your hand? Okay, not bad. And all the rest are in favor of banks versus fintech companies? Is that right? How many for
The rest are
banks?
bankers.
How many for banks? I don't see any hands up. So no one?
At least one. Come on.
So at least one, no? The guy, you spoke about banks. I'm hoping that you're in favor of banks. Well, I think there's space for everybody. That would be our overall kind of conclusion, I'm guessing. And the message that fintech companies can be the next unicorn as well, that they can adjust to customers' choices, that as users, we have the right to be able to use fintech companies, customizing those fintech companies to certain products and payment platforms as well, and that therefore banks and fintechs can adjust one another and play within the game. I think it's about having space for everybody. And finally, and especially, I would say, lastly but not least, but not lastly, or whatever that's the way you guys say it. It's about being able to have options in Spain, being able to have startups, being able to have investment, and being able to grow your companies worldwide. If you could summarize fintech in one sentence, what would it be?
It's about choice and more efficiency. That's what fintech is.
Alternative.
And one thing you would ask for, if you could ask anything, one thing you would ask for? The company, better regulation?
And just get a level playing field, keep it open for everyone.
It's a good question. It's a very good question. Politicians just letting us play without getting too much involved, just allowing more competition and simple rules and things like this.
So competition, choice, and market. Thank you both, and thank you all. Enjoy the next panel too.
Thank you.